In this video, we're going to demonstrate how Forex Source subscribers made money trading a sentiment shift involving risk sentiment and Fed policy actions this week. Now, the move we're going to be looking at is this one here on the Australian dollar versus the US dollar. So let's break this down and see how you could have predicted and caught this move using our market commentary. Before we begin, don't forget to hit the button to subscribe or follow us so that you'll always be notified every time we release a new video. So firstly, we need to understand the context or the baseline surrounding this pair before the move took place. So looking inside the Forex Source terminal on the 24th of March, we released our dominant currency sentiment report, and we saw that the Aussie dollar was supported by an overall positive risk tone as the market reacted positively towards the Fed's announcement of an unlimited QE program. On the other end of the scale, we also had the US dollar that was leading the pack to the downside as the dollar was pressured, also following the Fed's open-ended QE announcement. Thus, as long as the risk tone remained positive, we expected the Aussie dollar to gain ground on the US dollar in that session and had an upside bias for the Aussie dollar versus the US dollar for that session. Once the baseline was in place, the next step was to identify the next breaking news that would generate the biggest market moving shift. Now, also in the terminal, in our video commentary section, we released our daily open videos for all of the major pairs and explained that a further ease of market concerns about the coronavirus, especially the economic impact from it, would see further risk on flows, and that would further support the Aussie dollar versus the US dollar to the upside. So now all we needed was the trigger, or in other words, a sentiment shift that we identified ahead of time to actually take place. Now, during the 24th, later in that same session, we had a very sharp pullback in all the high beta commodity based currencies like the Aussie, the CAD and the Kiwi, and we made a very quick update highlighting that there was no clear catalyst for that move downwards, and that meant that the move lower could be used as the ideal opportunity to buy the Australian dollar versus the US dollar at a much better level like the one we had marked out on the chart in our video prior on that day. So quickly jumping to the chart, we can see that this overall level of support is where we highlighted as a good spot to consider re-engaging the pair to the upside, and that we could have used this most recent resistance zone as a good spot to take profit on any moves to the upside. So if you just followed the analysis and the commentary throughout that 24th, you could have known three very important things. Firstly, that the bias for the pair was to the upside as long as the risk tone remained positive. Secondly, that the area between the 58.50 and the 59 psychological level was a good spot to consider as a possible zone to re-engage the pair to the upside. And we also knew that there was no catalyst for that pullback we saw in the pair as long as the risk tone remained positive, and that it was a valid trading opportunity to the upside. So following that simple guidelines could have banked you just shy of 90 pips to the upside, which really isn't bad for a simple day trade following daily sentiment. Now, it's important to realize that the focus of these trade examples is not to showcase any particular strategy of where to enter and where to exit, but rather to show you how our commentary and analysis can help you to interpret news, interpret fundamental analysis, and turn that into profitable trades like this one. So if you're interested in learning more about Forex Source and how our market commentary and analysis can help you, click the link below and check out Forex Source. Thank you so much for watching, and please remember to post your questions or comments below this video. We read and appreciate all of them, and we actually base our future videos on the questions that you guys ask.